In B2B payments, 50% of the financial return, and that's both cost savings and time savings, which is money, is just from the manual work that's eliminated.
Hi, everyone. Welcome to Payments TV. My name is John Gaffney, and what's next in payments is our topic today. And we're going to sit down with Ernest Rolfson, founder and CEO of Finexio. And we're going to talk about how much certainty are CFOs willing to trade for the speed and savings that come with automating accounts payable. Ernest is going to talk about why AP, long treated as a back office cost, is now a frontline lever for liquidity and resilience. Ernest, welcome.
Hey, thanks for having me again. Good to see you.
Always excited to have you here. The general topic here is on the current uncertainty in the global economy and the current trade finance issues that we're seeing. What changes are you making to keep your business steady through this? And what changes are you recommending your clients do?
Right. Well, part of what we're up to here is embedding, risk-aware digitized payments that are intended to basically keep these operations moving, even when markets aren't. Mm-hmm. There's been a lot of turbulence, as you know, particularly in areas like higher education, travel, manufacturing. And so one of the things that in these kind of crazy times, providing stability in the back office around visibility and predictability around your cash flow, around your payment acceptance, around supplier statuses. That's something that folks like Finexio can help provide, which gives them good visibility into cash flow, into savings that they can rely on, because the first half of the year has been, pretty shaky by many accounts.
Yeah. Agreed. So Ernest, your clients are under pressure to cut costs, but we both know that AP automation is a very, very much a worthwhile investment. Where are they seeing the fastest payback when they swap these check runs for Finexio's payments as a service?
So in B2B payments, 50% of the financial return, and that's both cost savings and time savings, which is money, is just from the manual work that's eliminated. Right? The paper check, the printing, the phone calls, the button presses, the proverbial wheel crank. The other 50% is around the payment methods that continue to grow with over 20% annual adoption of methods like card and fee-based products like Finexio Express, which is our proprietary ACH network, that suppliers are willing to take in exchange for a discount or a fee because of the increased fraud risk reduction, because of the increased efficiency for those suppliers, because they're already set up, the automation of the reconciliation data and emailing that mix of both taking out the cost by eliminating manual work with digital and some cash back elements with these payment products turn out to, on average, a 15 basis point, saving on every dollar that is put through a digital solution like Finexio, which is powerful. And we've seen much higher than that, of course.
Wow, 15 basis points. That's amazing.
That's on the low end. I think we're actually averaging a bit higher these days, and that's just because there's just so much paper payments and paper workflows out there,
which we're trying to get rid of, right?
Yeah, absolutely.
So Ernest, payments research shows that 91% of mid-sized firms plan to automate AP, chiefly to fight fraud. What are the attack vectors from your perspective that are pushing CFOs to do this, and what specific controls in Finexio's stack can neutralize these?
So, we've seen it growing. The biggest attack vector is absolutely digital. And when I say digital, that's over email and email compromise. And they're impersonating known suppliers, they're impersonating employees, and they're sharing payment information that the staff of these companies are not able to validate. So they're not able to really validate, is this a real person? Does this information match the previous information? Is the new information that they're giving me actually tied to the business that said person is representing they belong to? So those
Hmm.
are a bunch of different checks you would have to make. So we have something called a payment risk score here that helps clients make these trade-offs around how to manage this. Embedded in Finexio as part of our Finexio Shield service, which is our fraud platform, is covers all of the questions I mentioned. Right. So not only are we required by the banks to do OFAC and KYC and right some of these lists that corporates aren't checking themselves, right? So
Hmm.
we've got these kind of minimum requirements, but on top of that, we've got layered in the, do we know it's a real person? Do we know it's a real bank account? Is that bank account associated with who you think it is? Does it match? Are there any other weird trends happening as that payment goes through? Say all those things pass, there's still additional checks on the transaction size, the frequency, the recency. So there's a number of these pre and post security measures that, again, a corporate, you would have to buy at least three different security or anti-fraud things, apps,
No.
tools, and be trained on them and manage them to do everything that a platform like ours is doing. It's very hard. I would say emerging front from one of my biggest customers I spoke to this week. I was speaking with their executive leadership, and this person told me that an fraudster has taken a recording of his voice from the web, from information out on the wild, interviews that this executive has done, webinars he's done. They've cloned
Hmm.
his voice, and they are now sending voicemails of his voice to employees
Wow.
asking to send it. So that's really the next vector. And again, having these tools that I mentioned, at the end of the day, if that voice and it sounds really lifelike comes to you, you're going to have to log into some system and put in some new information. And that's where my system, my team system, can come and help you at that point. But it is accelerating rapidly. And they only need a few seconds of your voice, of course, now to be able to do that, something like 30
Wow.
seconds.
That's scary. Let's talk about something less scary, which is virtual cards. Um, so Finexio touts a 60% plus virtual card acceptance rate thanks to its card by mail approach. What tactics have proven most effective in nudging vendors across that line?
So, a couple of things. Card by mail is innovative because we are leveraging AI and machine learning to identify and predict with greater than 90% accuracy the supplier's ability to take card. And so, for long tail suppliers, smaller suppliers, yeah, hard to reach and infrequently paid suppliers, it's phenomenal because you can get to folks that can and will take card as a form of payment. But in the old way of physically calling or trying to reach out to them, there's no bank or AP staff in the world that could productively and cost effectively do that. So that's where card by mail is tremendous. And it's a completely digital process in terms of tracking it and opting out. So this makes it very convenient, very cost effective. On the general level, it's really it is a science, but the art behind it is having the multiple platforms, websites, educational material set up for those suppliers to find and self-enroll, and a multi-threaded outbound marketing approach that is, in collaboration with the customer and partners, using email, using phone, having multiple websites, multiple kind of outreaches, including check stuffers, including managing the email addresses and embedding the links on the email. So it's really a combination of multi-touch approach, all backed by the same AI targeting I talked about before. And then having that as an embedded type of the workflow ongoing, instead of thinking about it as a static one-time campaign, having it be embedded as part of the payment cycle and payment process. So for instance, you need to pay a new supplier with a check. Finexio identifies that that supplier is eligible to be paid with a card. That data that we're seeing in the payment transaction run is running through our filters and is being fed to our supplier enablement team that can then go and proactively start calling that supplier because it comes up in their queue and they're like, oh, wow, here's a net new supplier that our AI is flagged that they can be paid with a card. This is fantastic. We pay them with card for other clients. So it's basically embedded in the workflow. And then if they get that supplier, let's say on the phone, that they have so many tools to show that supplier, this is real. We're not a scam. This is safe. Many other suppliers are doing it. And your buyer, in fact, prefers this to keep you as a preferred supplier. They want to work with people that take card largely due to fraud, candidly, and savings. So it's this combination, which is really powerful.
Ernest, we're talking about trade-offs here, but there are some things that just can't be traded off. The interest rates are still high. Working capital is harder to come by. How have you found your customers using AP automation differently to unlock cash? And how are they using it to improve the strength of their supplier relationship?
Right. Well, part of it is managing their cash flow and saying, look, the trade-off is we want to get our checks down to at least 30% of our spend on checks, usually down from 100%. That seems to be kind of a national average right now that we're seeing. So it's like, hey, if you want to stay on check, we're going to have to pay you slower. Or if they're paying them on time, keep paying them on time. Or if they've been paying them faster, you know what, we're going to pay you at the due date. But offering to pay with things like card within 2 weeks and or faster. And so to kind of help our clients and partners navigate through that trade-off and that negotiation, which we, by the way, help them facilitate, which is a unique, I think, part of our offering, and the identification of that and the messaging of that is really complementary and powerful, is that we've got different payment speeds that we offer as well to complement that. So it's like, hey, we can get you paid with an ACH and there's no cost involved. And sure, we can get that to you faster than a check and it'll arrive faster than a check and with lower risk of fraud than a check. But you can get that payment same day and you'll pay a 1.5% fee or less, which is our Finexio Express product. And that truly is then a same day ACH. So we're using the different payment method speeds, different pricing, and then using the data to help advise these customers on the right offers. And we're customizing those programs client by client based on their working capital needs and position to be able to get the right scripting and messaging, which is standardized for all their suppliers. So it's a pretty sophisticated approach. It allows the more sophisticated customers that need to maximize working capital to be able to do that effectively. And if you don't have all these different payment methods, speed, pricing, and analytics to support it, you're not going to be able to do that effectively.
So, Ernest, last question for you. There's a lot of things that make Finexio unique. I mean, you guys layer analytics, RPA, AI, all into mission critical payables workflows. But as you talk to your customers and as you develop all these great features, what are some of the bars that a new technology needs to clear before you ship it? And how do you convince people to try these new innovations?
Yeah, that's a great question. We say here, don't let perfect be the enemy of good. But we do. It depends on what it is. I would say on the whole, we try to get it to 90%, give or take. When you're talking about moving money, it has to be 100%, right? Everything has to be right to the last penny, just for clarity there. But when we say 90%, maybe it's missing some features we want. Maybe it's missing some reporting we want. Maybe there's some manual step doing something that doesn't scale to be able to get something in the initial beta customers' hands so we can get the case study, get the results, get the learnings. So then on the next wave, we can go and manage that. I mean, one of the things we do too is we roll out new products and services to our clients always in waves, starting with our smallest customers. And, not that they're not getting a great solution, but when you're moving to larger and larger volumes and more complex customer needs, you want to be much more cautious again because of scaling, customer support, volumes, risk, all of those matters. So I think we're kind of very thoughtful around that. I would say customers don't really want bleeding edge ever.
Mm-hmm.
No one wants to hear that. I think that we're at the leading edge on many things, and we're also doing things that are really new or have never been done in this sector before, but have been done in others. And we're like, look, this is new for us or new for how you thought to apply it, but we didn't invent this, right? And that is what tends to help. I would say there's always more noise and with anything new. And so you have to kind of over communicate, I would say, the benefit and make sure those customers are seeing those benefits early and often, or they will push back. And so that's been learnings over time that we've had.
Well said, as usual. That's going to do it for this episode of Payments TV. My guest has been Ernest Rolfson, who is the CEO and founder of Finexio. Ernest, thanks for joining us.
Fun conversation. Thank you. Thanks for having me.